Well, good afternoon again. Just reflecting back on our other two panels, we focused a lot on the details of 2020, whether it was COVID or extreme weather, the political chaos and civil unrest. We talked a lot about policy and what the property casualty industry needs to do going forward and remain a vital force for social and economic resilience. So for this conversation, I'd like to go a bit more macro to the larger and longer term considerations we face, and then drill down and talk about what all of this ultimately means for the customer. So joining me today is Chairman and CEO of Utica National Group, Richard Creedon. And Rich is also the current chairman of the III. So Rich, thanks for joining me and being here.
Great to be here, Sean, with you.
Great. Let's start, again, going macro, the global economy, financial markets. What do you see and expect we should be preparing for in these longer term trends while continuing to meet our obligations?
Well, Sean, I expect the global and U.S. economy to have continued volatility in the near to midterm. It's likely additional rounds of stimulus will be provided to bolster the economic recovery. I certainly think that the highly accommodative monetary policy of central bankers is likely here for the long term. And that means investment yields will be suppressed by historical standards anyway. Certainly any sharp increase in inflation would be troublesome to the industry, especially where long-tail reserves are concerned. All of that means for us as an industry is we have to be strong underwriters. I think the rub there, though, is that sometimes good underwriting can conflict with a customer's desire for ease of doing business. So a priority for us as an industry is to make an underwriting process that's more efficient and less intrusive. I think the industry is up for that challenge. You know, we've roughly doubled our IT capital investment in the last 3 years. And I really think we're on the cusp of a breakthrough in improving the customer experience. Certainly the desire for digital engagement was well underway before COVID, and acceptance is just accelerating now in its aftermath. I think we should start to see the tools to accommodate consumers' expectation really gain adoption here in the years ahead.
Yeah, absolutely. Yeah, we heard from another panel, Pete Miller, the CEO of the Institute, saying that technology and innovation-wise, we fast-forwarded almost 10 years in this 1 year. So as we shift a little bit now to, we talked again in some of the panels around policy, and we've now got a new Democratic majority in Congress, and so priorities are likely to shift in the direction of arguably some renewed attention on climate change seems to be a very big issue, social equality, more international cooperation. We've already discussed these, as I mentioned, on some of our previous panels, but wanted to hear from you as what you see as a top strategic opportunity as well as threats that may emerge as a result of this new U.S. leadership.
Well, climate is both a business and a public policy concern. And as business leaders, we'd be wise to really see the risk for business and society and not wait for legislators and public officials to prescribe a response. I think ultimately climate risk is an enterprise risk challenge, and we should be integrating it into our ERM framework. That means understanding climate's risks impact on investments, on underwriting and operational priorities, and managing it really in all of those dimensions. You know, we already have the framework to be proactive and forward-looking with our ORSA process available to us, but we need to probably apply more resources to it. So, for example, at my company, we've decided rather than wait for regulators to try and limit fossil fuel investments, we've created a green energy portfolio. The idea here was to create a position in non-carbon energy production and be opportunistic as the economy transitions toward those non-carbon alternatives. So we think we can do that responsibly while still, managing that primary mandate of securing our financial strength for policyholders. But, the political arena also animates public expectations, right? So I think that one of the biggest challenges that we'll face in the future will be rising consumer expectations. So as an industry, I think we've struggled at times to, produce the product and service innovation. We often lag other financial services in our capabilities on those points. But both personal consumers and commercial buyers of insurance, they really want offerings that are relevant for their individual needs as opposed to sort of the standard form bundled offering that, we've traditionally offered. And with capital likely to be cheap and abundant for the foreseeable future, that traditional capital risk transfer element of our business is at risk of being commoditized. So that in turn puts pressure on us to have some valued services as a way to differentiate what we do. So I think our industry, with deep risk management expertise, data analytic capabilities, really should be well positioned to respond to that challenge and opportunity. But we'll need to innovate to stay relevant with consumers.
Yeah, it's so interesting. I mean, I like to say we've all been Amazoned, and so those expectations are there, and our industry is no different in that, and the expectations. So obviously, you very much agree with that shift there. Another big issue that we've talked about is around social inflation, and it really is not going away. It's only seeming to increase. And though the implications of COVID-19, we still have some unclear. It's not clear where this will all go. There will be leftovers. What's your take on rising litigation costs and how insurers and reinsurers need to be thinking more about this and acting on this threat?
Well, social inflation continues to be one of the highest priority issues for the industry going into 2021. In 2020, we saw a continued increase in claim severity. While the courts were closed in a lot of places, we did see some decrease in verdict frequency due to that backlog. The severity concern is still out there. ISO is reporting that despite significant drops in claim volumes, claim severity is up across several coverage lines. So I expect that as these backed up matters get through the court system, 21 and 22, as the COVID crisis abates, we'll see a resurgence in frequency as well. But all of the factors impacting social inflation remain despite COVID, right? Liability expansion by courts, growth in third-party litigation funding, saturation attorney advertising, and expanding attorney involvement, evolving jury attitudes are all continuing. So the plaintiffs' bar, has spent over $1 billion now annually on advertising. And to go along with that, this increased usage and sophistication of social media platforms as well. So social inflation, it just continues to march forward, right? The number of verdicts over 20 million is increasing. In 2019, it was up 300% from a decade earlier. And similarly, the median jury award for personal injury verdicts more than tripled in 88 years, ending in 2017. So, with all of those factors, all those trends driving social inflation, things like caps on damages, limits on joint liability, reasonable restraints on advertising are all options for bending the curve on court and jury dynamics. Likewise, transparency over litigation finance could help contain, the potential for abusive claim settlement dynamics as well.
Yeah, we were on the front lines and will likely have to continue to be on it. That's we established, as you were helpful with, our Future of American Insurance and Reinsurance campaign, just to try and neutralize some of these. So seems like we've got a lot to be thinking about going forward. And, as we talk about this year and to put it mildly, a challenging year, what areas of risk are keeping you up at night as a CEO? And conversely, what areas of opportunity do you see potentially as a silver lining for insurers and customers?
Sure. Well, Sean, the biggest concern I have for our industry is for our human capital needs. And frankly, that's the single issue I spend the most of my time on. It's a cliche to say people make our business go, but, with all the technology investments, digital trends we've invested in, this is still a relationship business. And I think COVID was not so much a test for our technology, but really a stress test for the loyalty of our stakeholders, our employees, our agents, our policyholders. All the investments in remote work technology won't help if that point of service contact breaks down due to poor employee training and morale. Now, I think as an industry, our employees did a great job. We needed to pivot to remote work, keep everyone healthy and engaged. Well, they dealt with, just unprecedented numbers and types of policyholder service needs, claim issues, billing issues, coverage question, payment plans, et cetera. So, 2020 really was the year of that frontline customer-facing employee in our business. You think about, industry generally, the business pages are filled with stories of celebrity CEOs and high-flying business leaders. But in 2020, all that really took a backseat to the hard work of frontline customer-facing employees in a lot of industries, but certainly in ours. And I think it showed that the best performing companies financially also have the best employees and the best work environments to go along with that. Long term, though, we face a wave of retirements from the baby boomer generation that's going to take a lot of knowledge and experience with them. So recruiting and retaining the best and the brightest from millennials and Gen Z to our business is just going to be a top challenge. And I don't think we're going to be successful with that innovation priority we discussed earlier unless we can engage our employees and make their work meaningful and rewarding. We need that because, our business needs more than just the newest gee whiz app. We need caring, empathetic, helpful people in the important service business that we live and work in. And so I think there's really an opportunity here for us to put agent underwriter engagement and policyholder and service reps touch points at the center of how we do business. I think there's lift in us for us to do that. For example, you look at the trends over the years in commercial auto. Auto is the most modeled line in our business, right? It's that biggest big data line in the big data world. And what have all those models produced for us? Well, until recently, the industry was running combined ratios near 110 for 5 years in a row. And I think it's because our models and the systems that they service took agent underwriter contact and the dialogue that goes with it to assess each risk individually out of the equation. But we still need to hear the particulars of each risk, their risk management practices and culture, to understand how we can service those risks better. And that only comes from agent underwriter engagement and dialogue. In commercial lines especially, I think the underwriters who take the time to hear from and listen to agents' assessment of the risk as frontline underwriters, they will get underwriting done right. I think the results are telling us that we should not place a reliance exclusively on models at the expense of conversation between agents and underwriters. We'll deliver consumers and buyers a better product in the long run when we promote that kind of engagement.
It's so interesting. I mean, empathy, the word that you used, is just critical and important for our industry. It's really at our mission of III, that's really what we're dedicated to doing, is making sure the customer, we understand the customer's needs, and we're trying to be a trusted source of information. It's remarkable that our industry set up an organization like this just solely to inform the customer and to be empathetic so they understand how to better manage risk. Really appreciate this, Rich. Thank you so much for joining us here. Thank you for your leadership with III. We've had a lot of change going through the year with our new campaign I mentioned, with our affiliation with the institutes, and your leadership has been right there with us. So really appreciate it. It's just been a pleasure speaking with you today, getting your perspective on these important issues facing our industry as we begin a new year after what we can only describe as one of the most tumultuous years in modern day history. So thank you. Really appreciate it, Rich.
My pleasure. Thank you, Sean.
Obviously, there will be challenges ahead, but I think it's been proven yet once again that our industry can and will weather any and all types of disruption. So as we help our customers and our communities recover and become more resilient so that we can help people who need jobs establish careers in this important industry that does so much for our communities. I would like to thank all of you who have joined us for 2021's Joint Industry Forum. As you have seen and heard, we will continue this forum in the summer so we can reflect on the discussions here for today and to determine what lies ahead for the second half of the year. So until then, I wish you all the very best. Again, thank you for your time, and please stay safe.